Let's kick off our discussion with Bill, who will share his views on yesterday's milestone SEC decision, as well as his broader views on the current investment environment. Bill?
Thanks, David, and thanks everyone for your time. Really appreciate your attention and the time because that's your most valuable resource. So we're going to start with the Bitcoin ETF situation just because it's top of mind for everyone. Two observations I want to make, and I'm going to end with where we stand now on the technology. First observation is the milestone decision, from my assessment, really came in August of 2023 when the DC Court of Appeals ruled that the SEC's prior rejection of Grayscale's application for an ETF was capricious. That decision is what cleared the way for today. And actually, if you look at the price of Bitcoin when that decision came out in August, it was about 26,000. And since that time, the markets have anticipated the demand and they're run up about 75% to the current price today. The other observation I want to make about the decision is that, ironically, despite the SEC's reluctance, it actually counteracts the underlying promise of Bitcoin, which is to be something independent of government control. Because what ETFs do is they centralize the custodianship and the ownership of Bitcoin. Now, with all of that said, what do we think about it now? We're still enormously bullish, not only because of the upcoming halving this spring, which will reduce the marginal supply of Bitcoin entering the market each day, but more importantly, because of the longer-term promise of the technology as the only asset that I'm aware of where the marginal supply or the supply is completely independent of the demand for the asset. And we now have a 13-year track record of increasing demand for the asset. And again, we now have institutional demand from via the ETFs or accessibility. We also have the marginal supply getting cut in half. This is really important because every bull run in Bitcoin's history has come on the heels of a halving event. Bitcoin miners receive Bitcoin in exchange for verifying transactions. They then sell that Bitcoin onto the open market to fund a lot of their operations, their machinery, all kinds of things. And that marginal supply getting dumped onto the market will be cut in half. So unless you think demand is going to fall drastically this spring, there's one clearing mechanism for that, generally speaking, and that is a higher price. So we're enormously optimistic about not only the price, but the technology longer term, because what it stands for, in our assessment at least, is the promise of a completely new monetary technology that could end up being the future reserve currency of the world. It's a global phenomenon, and it's very early in our opinion still. So it represents an enormous part of my personal financial picture. It represents an enormous part of Bill 3's financial picture, and we're still hugely optimistic on it. Let me point you to a couple resources because people always ask about this. Two pieces on our website I'd encourage you to read. One, The Value Investor's Case for Bitcoin, which we wrote in 2015. That kind of lays out the long-term conceptual framework for how to think about valuation. At $1 trillion in market cap, 900 billion to $1 trillion right now in market cap, it's still a tiny fraction of all the assets in the world. And so there's a lot of room for growth there from our perspective. The other piece, MicroStrategy, Bitcoin, the mother of all fat tails. We wrote that 3 years ago. That's also on our website. It talks about all the bear cases for Bitcoin and why we don't think they hold a lot of water. Finally, the other resource I'd point you to is the website hope.com. That's done by Michael Saylor and MicroStrategy, and it's a phenomenal collection of thinking around Bitcoin, in-depth research, and all of the stuff that you'd want to understand before purchasing it and joining the movement as I think of it.